Surprise! Yo! What's up?
Grand rising, grand rising, grand rising. Grand rising.
Grand rising.
Grand rising.
Grand rising. Grand rising. I hope you had a good weekend. We're going to get straight into it. We're going to get straight into looking at our GU. Okay. I think there was a potential. I still think we need to sell it. I think we're going to be selling it from our 50% area. Remember before I said didn't quite get into our 50% area. And I think that the market is still trying to push to get up into that level. I think there may be an opportunity right now if this market breaks to get into a buy. And I'm just watching it right now. Please let me know if my music's too loud in the background. I cannot hear it. Let me know if I should touch it down or if it's just background music. It should just be background. I need it to be. I don't have no infringements happening. We are trying to record this session. It's going to be a great session. So, you know, we're trying to make sure it gets recorded so that we can play it back. Now, let's have a look. See what's happening with this market. I don't want to take my eye off it at the moment. 1 second, let's have a look. It's Monday. We do know Monday that the markets can be recovering and can be a little bit volatile due to the weekend. However, we should be alright. So tell me, is my sound okay? Am I loud enough and is the music background enough? It should be. I'm hoping so. I'm hoping that I'm not too loud on my music or too quiet on the mic. I'm hoping everything should be okay. Am I alright? Do I sound alright? Tell me yes.
Yeah, you're good.
Good. Okay. No problem. Alright, so we are looking at this market right now and I'm thinking we're going to get a break of structure here and this market's going to continue to push up. Let's look at it from a larger perspective, okay? Let me pop an alert in here. So I do actually want to get involved this morning straight away. Let me get that ball rolling. And let me do this. Pull up our cashback forex as we know we always need it. And I'm going to pull it off the screen. I'm going to put it on my other screen. Back over here. All right, so have a look right now. I figured there may be an opportunity for us to get in now. The reality is it's very, very small. So I'm going to have to be looking in here quite small. About 10 pips below that low, okay? However, I am interested. I'm interested in getting involved. Let's have a look and see what happens in here. Now it's Monday, so I'm going to be very, very small in my position. Very, very small to be able to take advantage of what's going on. If I drop my time frame down to a smaller time frame, I do not want you guys down here at all, but this is just, I'm going to take this trade whilst we go and break it down and understand it from a larger perspective. We want to be selling this trade from a higher position. I'm just getting my ball rolling. I'm going to buy into that position. If you want to, you can also do the same, but I'm saying to you, manage your risk. Okay, make sure your risk is fully managed because it's Monday and the volatility is definitely there. Now below this low, it's only a 5 pip zone, but I'm going to go all the way below, go over here, okay, for approximately 10 pips. Let's see what happens. If I get a close above here, then I may get involved. We might see this market push down in here a little bit deeper before closing up above. So I'm going to wait, see what's going on now. We're going to break down. This is the same trade and the same idea from last week, okay? And we're going to break it down and understand why I think that market is coming over here. Why I think it's going to push up, all right? And we're just basically going to see this week if it respects what I'm saying and it actually does that or not, okay? Watching it, and I'm on a very small time frame, so I'm not taking into consideration a 15-second close. I'm just watching it because I want to see a closure on the minute at least, which is, you know, and potentially the next 30 seconds is going to be on the 5 minute also. We'll get a 5 minute close above here. Look at the time. All right, so I'm just watching it at the moment. Now we know we discussed lots of things last week. I want to be going over this week again in regards to the best times to trade, etc. I like that. I like that. And on that basis, I'm going to get involved real quick. Okay. All right. Now we can break down the trade. All right. Now we can break down the trade. All right. So let's go look over here and let's understand about this market. All right. We're going to go all the way to our daily time frame. I could wipe the charts. I don't think I need to. It's not messy enough. Let's make this full screen so we get as much real estate as possible. All right. Now let's have a look at this market. We said from last week, same energy, all right, that this market is overall, ultimately, it's a bearish market, okay? It's a bearish market because if we zoom all the way out here, go even to our weekly or monthly, we can see the market making lower lows and lower highs and lower lows and lower highs and lower lows. And we're coming to we thinking to ourselves, why wouldn't it continue doing so? Okay? Now, when we knuckle down to our daily time frame, we can see how the market was bullish up in here, making higher highs and higher lows. It was bullish, okay? And when it got up here to the top, we saw a break in structure, okay? We saw a break in structure, just broke this swing structure. And we said from down here that this market might be making a retracement to where? Where did we say this market could possibly make a retracement to? Let me get this out of the way. Where did we say that this market could possibly make a retracement to? If you look on the screen, the hints are all there, the clues are there. Okay, where this market might be making a retracement.
50% of the impulse.
Exactly. So this is the big impulse coming all the way down here. Boom, 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 boom. Breaking structure. Now, when you break major swing structure, the market likes to take a breath, likes to make a retracement. Why? Because we understand that the market moves in waves. It doesn't just move in one direction. It doesn't just go like this. Okay. So when the markets, for example, let me explain it to you. This is if it's the one thing going to take away from this morning's session, is that this is swing structure on this time frame that I've drawn it. Okay, and when we see the market turn around and break swing structure, it likes to make a retracement. And more time out of 10, it's to that 50% of the impulse. This is the impulse that push down here. So 50% of that impulse. So we had that lined up from last week Monday, and the market came all the way up to here. Okay, but I was always a bit concerned because it wasn't quite into our 50% level. It didn't quite. I'm really expecting this market. When I say 50% level, I'm talking about getting into that level and breaking structure. Now let's talk more about this 50% level. Let's look at structure. Have a look left. When we look left, we see this. 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 For whatever reason, this little price point over here, around the 125.06 level or 126.00 level, is a price point that this market liked. It's like it enjoyed. Okay, now what do I mean by that? What do I mean it's a price point that the market enjoyed? I just mean that, it's a price point that the market, the group of people that will buy, and say, for example, this is a market for, I don't know, for a particular jacket. They like that price point. They don't mind paying that price point. They don't mind paying £500 or around that figure for that item. They're not going to pay £5,000 for it. They don't like paying, and the market would be out of balance if they were selling it for £50. But around this level, it's like the companies can get away with charging that price, maybe having some little fluctuations around it. Over here, it's $5.05. Over here, they're doing a little discount. Black Friday, it's $4.90. But around that price, there seems to be some structure, all right? Where the market was sitting on it, the market was fighting to break through it, the market came back and retested it. So that adds some confluence to this 50% level. So I'd like to see, let me zoom in. I would like to see this market, which, when the market came up here last week, I did say, and the sessions are recorded, that I was a little bit concerned about the fact that we haven't quite gotten into here when it started making this little push. But now we can see another little push happening over here at the moment, and I'm thinking to myself, maybe that push is going to push up into these levels, and then that will trigger my thought process for the sell. All right, it will trigger my thought process. So now, once we've gotten into here, looking for some sort of break of structure, but still trading what I see in regards to potentially selling the market. Okay, so let's knuckle down to our 4-hour time frame. Now we broke down clearly. There's many videos on YouTube that we broke down how we took all the trades last week. It was a very, very profitable week, a week whereby the analysis played out nicely. All right, we saw how this market created, a big imbalance here. We saw the market come down and, tap into this imbalance. If I drop down my time frame over here, and at the moment now, the market on a smaller time frame, if I go to an hour structure, we've seen the market, push down to here and start to break structure on our time frame. All right. So where's structure on our time frame? This is the hour time frame, as meaning every candle is an hour. And if I was to do this, I'm going to make it a different color. No, I'm going to make it a different color, like that. The market was pushing down in this range, making lower lows, lower highs, looking lower low over here. And then we've seen structure breaking. All right, we've seen minor structure breaking in here. This is some minor structure because within this pink impulse, the impulse, we can break it down again because we understand how the market's a fractal, that the market was doing this, then did this, and did this. All right, so that there's different legs in there and they create their own smaller structure, but it's not major structure, it's minor structure. So if I did that, have a look, I'm gonna put a white line in here. This was the little impulse. This market came and pushed down and broke. So we can see this market here. Structurally, this is structure. Okay, or around this level here. Around this level is structure. Then obviously the next more swing structure is over here. Either way, right now we've broken both of those. We broke here on Friday. We made a retracement down into here. Tapping into, look, what did we tap into? Every time, guys, every time we can see these things. The market broke structure in here. Then what did we retrace and tap back into? What did we retrace and tap back into?
Yeah, boy.
I'm showing it. It's on the screen. Yeah. The market broke structure here. Boom. If I was to rewind our charts, just so we can see it, how it plays out, maybe that, makes it simpler for you. We were sitting here on a Friday, 8, 9 o'clock, 10 o'clock. We saw the market smash, bang, break structure. That was the indication of where it wanted to go to, okay? The indication. And then what are we expecting afterwards? A correction, but potentially to where? Potentially to where we seeing that correction? I know you're all very busy. Yeah. All right, good morning there. All right, every single time it's so simple. When we look at it, have a look. The market broke structure, smash with big hour candles, breaking this level, breaking structure. But we don't get carried away and hit the button because we understand market structure. We understand the market moves in waves, and we can also see this imbalance here. And we also know the market has to come back and retest areas that it broke from. Have a look. Have a look. Straight in there, 50% in that imbalance it tapped into, and then afterwards we saw it continuation of that market go and breaking structure. So for all purposes, at that point in time, we could have been in this trade if we wanted to. I'm on an hour time frame, so there's definitely a much better entry. There is definitely, shall I show you where that much better entry is? Let me drop my time frame from an hour. I'm going to put a vertical line in when it tapped into, look, imagine we're watching this. When we're watching this, we've got our area of interest. Our area of interest is this imbalance in here after we've seen an indication. So have a look at our better entry. This is the 15-minute time frame now that I've knuckled down to in here. Because at the point when we tapped in here, boom, all my alarms start ringing. It's time for action. I'm excited. But I can't just get excited and hit the button. I mean, drop to my 5-minute time frame, which I said to you guys, is kind of the lowest I want you guys getting down to. There is sometimes you may have to go down to the minutes. And if you understand market structure, don't be scared of the minute time frame. Okay? However, it is noisier and it's more complex. But have a look. This market came up in here. Lots of little candles as the market was doing the hokey cokey, kind of going sideways, doing whatever it needs to be doing. And then we've seen the market come and push down into our level. If we were to draw some lines in here for that push, those lines will be looking like this. Okay? So at the point when it pushed down into this, what are we looking for? What are we looking for in regards to ICC? Straight, say it out loud, what we're looking for. ICC, for the people that are coming back in the session, I can see Tam, good morning. Big up Dwayne, back from Miami. Everything's going good, all right? So when we've come and tapped down into this imbalance, all right, what is it that we're looking for? I'm going to make it a little bit simpler for you as well. Have a look. This was pushing down in an impulse. So this is this impulse down in here. This is this kind of angle that the market was coming down in here, all right? So at that point in time, what would be, if we're looking here, if here is our kill zone, if we're here and we're thinking to ourselves, yeah, this market's going to make a retracement, and we've seen it retrace, this was the kill zone area that we was looking for. It was into this area where we was going to start getting busy, getting into like activating. So when we've tapped into there, all we're waiting for is ICC or BRB, break, retracement, break again. So here we've seen this indication of it breaking structure. Yeah, we've seen this correction of it coming down into these levels. Yeah, and then we've seen it come and close back above for all purposes, all the way back in on Friday. That could have been our entry when that candle closed, with our stop below this low. If we wanted to be safe, if we wanted to be very aggressive, the stop will be below the last low, or the stop will be above this low. I'm going to place in both of them so you guys can see the difference between an aggressive trade, all right, which is higher risk of you getting stopped out, okay, but higher reward because it's a smaller zone. So this here below this low would have been the higher risk entry. I'm going to give it a little H, okay. Where's my H at? Good. I'm going to give that a little H. And I'm going to go over here, and I'm going to give this one an L. All right, and the L is for the lower risk, okay? The lower risk because we place our stop below this low over here, okay? All right, for, I don't know, 25 pips. And then the higher risk one, we place our stop below this last low over here, for like, let's just say 15 pips, okay? All right, now let's have a look how that played out. We can see how it played out. The market went to space, okay? All right, and you see the point is, even when we're in that trade and that market's pushed all the way up here, giving us a lovely 1 to 2 in that trade here, and on the lower risk one giving us we're like a 1 to 1.5, okay? The point is that ultimately this market shouldn't be coming down back into these levels. All right, let's keep it playing forward, see what happens. All right, because as this market is moving here in waves, all right, you're right, all right. All right. So as this market's moving up in here, we understand that the market's trending within a range. How did we understand that this market was trading within this green range? Well, it's just simple. We took some data points that were available to us. These are data points. This here and this here is a data point, and we just simply connected the dots like that, and we pulled out a parallel line and tapped it on where the market was touching on the top end. Okay, and then we can see in regards to that, how the market has been trading within that range. All right, so ultimately where we are right now in that process is I'm thinking to myself that this market may wish to continue pushing up to the top of this range. All right, that's what I believe. All right, that's what I believe. But down here, if we got in this trade from Friday, all right, we can see how this trade is a beautiful trade. All right, that may continue to push up, making higher highs and higher lows. And we're looking at 1 to 4s over here, but an easy 1 to 4. Now ultimately, guys, I want to sell it down from this green area. I want to sell from this green area. Okay, ultimately that's what I want to do. But right now on a Monday, what are we seeing? Okay, on a Monday we see this market trading within these range, this wave trading within the range, and the market made a retracement down from the top of this green range. Remember, this is the same green range that we pulled out from Quay back from the data points, and it's been trading within that range beautifully. Is that a coinkydink? It's not a coinkydink. It's how the market moves. It moves within ranges. Okay, and we can see how the market made this retracement like this. Look, made this retracement like so. And remember, when I draw these lines in, they're just a guide. They're just a guide. They're not, you know, oh, it went a bit above the line. This is just a line I'm drawing on the screen to guide my eye, okay? And we can see the market was trading within that, and then boom, it gave an indication of where it broke the structure, traced, made a higher low, and broke above. Okay, this is definitely showing this market has got some bullish energies now on a smaller time frame. Okay, now Monday can add an element of volatility to these markets. Okay, which may affect our technical analysis. Why? Why is that? Well, because the world's still been going on. The world has still been spinning over the weekend. You understand? Things have still been happening over the weekend, and for that reason is that on Monday, the markets may need to catch up to what's been happening in the world. And that's what adds this extra volatility, and why you hear a lot of traders turn around and say stuff like, you know, they don't want to trade. Okay, they don't trade on the Mondays. All right. But ultimately, we can see how this market is, you know, give a lovely indication breaking this structure, a correction back down into these levels. All right. If you want to see, you know, where it's corrected back down into where it broke the structure down here, because you see it on a smaller time frame. This level is structure, because look, the market was going like this, up, came down in here, up to this high point here. That's reading each candle. All right, if you can't read each candle, unfortunately, you're going to have to drop your time frame down to see the market structure in here. Okay, so if you understand that I'm saying that this is what this market is doing. In this, I'm reading the candle. Without seeing the structure, I'm reading the candles. This market opened up here, went like this. It's snapping. Went like this, then came back down here, and then went like this, and then came back down here, and then it went like this, and it came back down here. That's the structure I can see from these candles. Now, if you can't read the candles, you're gonna have to drop your time frame down to see that market structure, to see it playing out. Can you see it? Can you see it now? But look, you can see it now, right? Obviously, this is the way the candles, I mean, that little thing snapped, right? But you can see it, look. Down, then up in here, and down to this point in here, then up into here, then down to this point in here. So therefore, this level over here is in this very, very small time frame. Okay, that level there is structure. All right. So when we saw a big push, all these green candles just now, I'm showing you how fractal these markets are, how they happen over and over and over and over again. When we saw this big push of all these green candles here happening, we understand that the market likes to come and check, look, check where it broke structure, and it broke structure right here. The market came a whip back into that level here, and in here on a smaller time frame started breaking structure and pushed up. This happens time and time again, and it's just about understanding that simple process of looking at the market structure, managing your risk, and getting involved at high. I'm not going to say high probability, because this isn't a high probability trade. This is just showing you the strategy in regards to the market structure. Now let's get to what I just said in regards to a high probability trade. A high probability trade for me is being able to determine and say that you are selling at the top of the range, and you are buying at the bottom of the range. So the bottom of the smaller range, which is the bottom of that medium range, is the bottom of the bigger range, is the bottom of the XL late range, is the bottom of the double XL range. That is a 10 out of 10 trade. Let's try and spot that. Let's try and understand what that means, okay? So what that means here is this. This market here, for argument's sake, has been selling off, right? On a larger time frame, look, this market is bearish, right? So I'm going to do this. I'm going to put this little arrow. Let's go find a nice little arrow. And this is these are the only trades you should be taking. Is you only should be taking higher probability, top of the top. Listen to my words. Those are the only trades you should be taking. In reality, it's not necessarily possible that you're only ever taking a trade sell from the top of the top. So when I say the top of the top, this range coming down, it means that at the top of that range, all right, have a look here. The top of this range on this white line, like this, is sell territory. All right, so the market is bearish you want to be selling in a bearish market. So first and foremost, if you're trying to understand what high probability top of the 10 out of 10 traders is, that this GU market, you are going to only be selling in that red rectangle. The only thing you're going to be doing is selling this market in that red rectangle. Yeah, and then you're going to get down to a smaller time frame. If I go down to my daily, yeah, and on the daily time frame, for argument's sake, okay, let's do this. Have a look. I'm going to go back here. I'm not going to do here. I could do here. All right. Let's do here. All right. When this market comes up here on a daily time frame, within that white, this little white range here. Let me make it a different color so it's not confusing. Within this yellow range, the market is bullish, making higher highs and higher lows and higher highs. But we're coming into that red kill area, and you're going to be looking for sells from that red kill area, and you're going to be waiting for the market to be making lower lows and lower highs, and then once again you're only going to be taking sells from the top of that range. Have a look. So once again, now you're at the top, i.e. this bigger red area, and now this impulse coming down, you're also at the top of that area. So let's put another little red line, all right, another little red arrow. So that's top of the top. Can you understand my point? And then if you want to go down to a smaller time frame because you're not taking daily trades, have a look. We're going to drop down to a 4 hour for argument's sake. I'm just showing you what it means, because a lot of people don't understand what it means to take a higher probability 10 out of 10 trade. So let's imagine this trade, no matter wherever we are, the market came and pushed up in here. This is an example. It pushed up in here. I'm going to make it a different color so we don't get confused. I'm going to make it blue. Pushed up into these levels over here. I'm not taking this trade. If it's coming into my kill zone, definitely it's coming into an area that I'm interested in selling the market from. All right, top of the top, because we've got two reds now, so top of the top. All right, I'm waiting for the market to start breaking structure, making lower lows and lower highs. Okay, and let's imagine that even, for argument's sake, let's imagine that even was up in here. Have a look. Have a look. It's even up in here. All right, of this impulse. So if I was to rewind, hopefully the market will give me that here. All right. So I'm thinking to myself, great, I'm at the top in this bigger red zone, and now I'm at the top of this, red zone that's surrounding this yellow line. And then this market started to break structure, making lower lows and lower highs. I want to take the trade on the top of the top of the top now, which is on this line. You see, this is how you identify a 10 out of 10 setup. Yeah, because you're like, when that market gets up into these levels here, I want to be taking that trade. I want to be trying to look for an entry to be able to sell this trade. All right. So for argument's sake, let's go back over here, because I'm just for this example, because I'm doing this example on the fly, guys. But I'm just showing you that it doesn't have to be rehearsed, because it's the same principle every single time. When this imagine I'm on a 4 hour time frame. I know that none of us are probably taking 4 hour trades. All right. None of us are still taking 4 hour trades. So this is still, a little bit of a way out. But when this market comes down here and breaks structure, where do we think that the market might retrace to? Where do we think that the market, when we've seen it coming out here, price breaking outside the market, where's the structure that it broke? This is structure that it broke. This would be swing structure of this impulse. Have a look. Of this impulse coming up in here. I'm going to make it a white line so you can see it a bit better. It's so easy, guys, when you understand how to read this. It becomes easy. It just becomes whether you are always able to see what's going on. All right? So this becomes some structure of that impulse. Here and here. Okay? All right? And as we saw this market coming, breaking down in here. Yeah? Let's rewind a little piece. And breaking that swing structure. Let's go to my 1 hour time frame. Where do we think that this market might make a retracement to? Come on. It's the same every time. It's the same every time. All right. It's 50% potentially off the impulse from the top to the bottom here. All right. And if you can't see what that 50% level is, because my chart is looking a bit mad as I'm explaining this to you, it's in here. I'm going to make it green. And I'm just doing this on the fly. Let's see if I get egg on my face, so let me see if the market does what it's supposed to do. Oops, on that one. All right. Have a look how the market comes when it breaks this swing structure here, boom, and then decides to start coming back in the opposite direction. I've identified this 50% level, and I keep an eye on it. Let's have a look. How? Look at it. How? Second, where is it? Okay, pow! Beautiful. Perfect. In here is where I would be looking for my trade. Alright, so now we're at the top of the top of the top again. Alright, in this area here. And I'm on the hour time frame. Hopefully this gives me the data. Let's drop our time frame down to a 15-minute. Yes. And then what am I waiting for? Quite simply, I'm waiting for a break of structure. Where's the structure? Have a look. In this impulse, like so. Like so. I'm waiting for a break of this structure on the 15-minute time frame. There is an entry here on a smaller time frame, 5-minute. Okay, there is an entry, but let's just say here I'm waiting for a break of some smaller structure. Okay, where is that smaller structure? Here. Oops. Can you use the smaller one? So big. Oh, I know. Here we go. You know, here. This is structure. Okay. As and when that market breaks that structure, boom. I'm waiting for some sort of retracement, which is into here. And then I'm waiting for a close. Now, you don't know where the retracement's going to go to. You don't. But what you can understand is when the market closes back down below after making any type of retracement, that coulda, woulda, shoulda been your entry with your stop above at least that high over here. All right. So now when I've taken that trade, I can quite confidently be like, look, I took a trade at the top of the top of the top. Let's have a look at that trade. Let's zoom back out. Let's zoom back up to my hour time frame. Let's have a look at that potential trade that I've just taken over here. All right. I know my chart's getting a bit mad because I put all those red boxes. But let's get rid of them red boxes then. I think you understand the concept of the top of the top of the top. Let's get rid of that red box. Oops. No, where's the other box? Where's the other box? Yeah, we can get rid of that one. Get rid of that one. There you go. All right. Let's have a look at the trade. Gone. High probability trade. 10 out of 10 trade. And realistically, we're supposed to be able to go to sleep. And this is what this trade just keeps going. Why? Because I'm expecting it to at least get down to the bottom of the range. All right. Now it might not. It might decide to do something else. Yeah, we might, news might come out, some kind of issue might happen. But ultimately, from a structural perspective, you can see the market still got. I'm not saying that we'd still be in the trade all now, because look, believe me, you get all the way down to this level here, or a beautiful 1 to 5 trade, you should take your profits. But I'm just showing you that this would be a high probability trade from the top of the top of the top. Look where our stop is here. We've gone to sleep. All right, let's have a look. Let me put 4 hour. It's taking too long. It's making a big retracement over here. Okay, it's making a big retracement over here. But I'm just showing you from a structural perspective. Let's imagine you did go to sleep on it. Right now, you'd be upset because you're back in the red after being in huge profits, which in reality, you would have taken your profits. But we're just looking at it from a market structure perspective. Let's have a look. Look. It played with your heart a bit, came back up to your entry, but look, and where should it go? It should go back down to our range. Look, now at this point in time, let's imagine that you did wake up after you fell asleep. You better be taking your profits. You've got down to the bottom of the range. This is what I'm talking about a high probability 10 out of 10 trading. If for whatever reason you was able to be at your charts on Thursday, January the 21st, Friday the 21st of January, and you got into that trade, and you even decided that you wanted to put in a little bit of extra risk, as then you wanted to tell me, say, this is a top 10 out of 10 trade, and I'm willing to risk not 1%, 1.5%, or 2%, because I'm placing my stop in the safest place. I would understand, because you've got all the ticks in the box. You haven't got like half of the ticks in the box. You had all the ticks in the box. And this trade, even placing our stuff above that swing high, which is a good job we did, because the market came back again and tested our metal by coming up into here, but not stopping us out. This trade here is a 1 to what? Let's just say 13 trade. Now, who doesn't want to take a 1 to 13 trade? Yeah? Even if you have to sit in it for a few days, that's a tremendous trade. But the point I'm making is, if you understand what I just did, showing you the top of the top of the top of the range, yeah, and you can keep going as many tops as you want. I was putting in those red lines, but there were so many. There's probably about 3 or 4 tops there in regards to time frames. So what do I mean by that? I mean that maybe this one here was, weekly. As like a weekly kind of, top range. And then maybe this one here is, I can't remember. I'm just using this as an example to show you that in that trend at the top of that range, then this one was like the daily. Do you understand what I'm saying? And then maybe this one was a 4 hour. Yeah? Top of the 4 hour range. And then this one was the top of the 15-minute range. Or hour range. Like, this is showing you this is a high probability trade. And I've just shown you on the fly. This ain't one I made up earlier and I looked for an absolutely perfect scenario to explain. This is just me randomly looking at the markets and picking it out and being able to show you on the, live. Because this, look, even this push all the way up here, could have come up here and put egg on my face and start pushing all the way up here into space. But it didn't. It came back up here, brought my profits back down to 0. I'm saying not to say that you've stayed in this trade after taking a 1 to 5, because maybe you would have taken your profits and been over the moon with that. But the point I'm showing is, when you trade with market structure in the direction of the trend, when you do that, you're taking a higher probability trade that is supposed to go in your direction. To be fair, here, the safest place for my stop would have been above this swing high. But I've taken a medium level, which is above the pivot where it turns around. That's a medium kind of entry. All right, a higher risk would have been a smaller entry over here, which would have made that 1 to 5 position a lot more profitable, maybe 1 to 10. Okay, but when it kicked back, as the markets like to do, likes to move in waves and play with us and make retracements and close imbalances, it would have stopped us out. So that place where, in this example, I placed my stop was perfect, above that 50% level, which is that green rectangle that we spoke about here. And the market went to hell. And this happens over and over again. Look, if I was in this market right now, after taking this great trade, and I'm going about my business, maybe trading some other markets, I'm going to be waiting again to get to the top of the top of the top. Now, yes, there's opportunities, of course, on a smaller time frame how you can trade retracements. You could trade this energy back up into this level. You could. I'm not just saying that, because this point of being able to take this 10 out of 10 out of 10 out of 10 out of 10 trade, look, oh, this even went continue going even further, guys. This accelerated. Have a look at this. Woo. Yeah? This ability to only take 10 out of 10 out of 10 out of 10 trades might not present itself all the time. So sometimes you might be taking this trade and you don't have this one. Because the next time it's going to be a top of the range on the weekly might be in 6 months, and you're not going to not trade the market for 6 months. And sometimes you might even be looking at it, and because you just want to get in and out of the markets on one day, you might not have this one. But at least you understand of how valuable that trade is or not. You understand, okay, this is not 10 out of 10 out of 10, but it's a 9. Because I don't have this one, or it's an 8, because I don't have that one and that one. And that, ultimately allows you to adjust your risk accordingly. Now have a look at this. This market was coming down here, trading down. Once I've seen it, look how it broke outside of the range. Yeah. And if think about it, look how it burst and it broke through outside of the range, aggressively smash. And I'm thinking, first of all, I'm definitely concerned that the market might come back up into this level here and check what's going on. But this is showing me how much bearish momentum is coming into this GU, how USD is stronger than the Great British Pound, because it is accelerating. Look, aggressively smash, breaking outside of our yellow range and creating new trend. A new trend. Yeah, as this market's pushing down in this direction. And I'd be over the moon if I was still in that trade, because it's accelerated in the direction that I want it to go, because I'm trading with the trend. It's unlikely it's going to accelerate against the direction I want to go, because it's going in that direction. It's a ball falling down the stairs. Okay, but so now as this market comes in here, again this becomes a top. Now we're getting a bit more complex. This here becomes a top. However, we are always concerned that the market might want to get back to the top of this range, yeah, and even back to the top of this range. This is always the concern that we now have in our mind, because we're a bit later to this trade now. The trend, this started from up in here, so therefore it's got more options of, you know, does this now come back up into here? Does it now come all the way back up into here? Because if it came back up into here, it's still a bearish market on a larger time frame. Okay, let's have a look and play it forward and see what happens. There you go, it tapped to top. Oh, it's still broken that top. Have a look. Maybe it's going to our other little top of the top range. Just have a look. Let's see. Yeah, I'm gonna take that. I'm gonna take that. Yeah, I'm gonna take that as this top of this range here. Remember, this is just an area. I'm gonna take that. So that's a prime example of what I just said. Even though the market accelerated down here, maybe it wants to get to back to the top of this range. Now, like I said, we don't know where that top is going. In fact, we can insinuate. Have a look at this. I'm going to pull out a line from here to here, and where do we think that retracement might have gone to? That acceleration from here down to here. Where do we think it might have retraced back to?
Was so, my socks were so, I had to
50% of the impulse.
Every time. Okay, so when I saw this market start coming back and make this journey here, I would be aware of this 50% area. I'm not trying to say I'm just going to hit the button when it goes in there like I'm playing Snap. I'm not going to hit the button, but I would be very aware that this is a 50% area. Then when I start to see this market breaking structure, this is structure here. Let me try and I want to get rid of some lines. All right, well, let me just, for now, I'm going to make this a different color because I'm doing the education is why the charts are looking like this, guys. All right, but look, this was trending up. When I see this market breaking structure, I'm looking on the 4-hour time frame. If I wanted to, let me drop down to my hour. Look, the market came up here. The market started to go sideways. Consolidation. Sideways in here. Sideways in here, and make it a different color so you can see that sideways action in this blue area here. Let me fade these out because all of these colors, even though it's showing you these 50% levels, etc., it's making the charts crazy. As soon as I start seeing that market breaking structure, making lower lows, lower highs, lower lows, ultimately it's giving me the trigger to be like, I'm going to get into this trade because it tapped into an area that I was interested in. Where was that area? It was the 50% area. This green box, and then it started breaking structure from there. I mean, is that a coincidence? After it's been just coming up here like this, look, making higher highs, higher lows, like an absolute missile, all of a sudden it tapped into that 50% area, which is an area of interest, and then started breaking structure. Let me tell you something, it's enough for me. Break structure, retrace, close back. Now, there's an entry here. There's definitely an entry up here on a smaller time frame, because I'm on an hour time frame. If I drop down to the 15 and 5 minute, there's 100% an entry in here. After it's made its correction and it starts to break structure for the continuation, but just for this purpose only, we can wait for this candle to close. We can place our stop above this high here, which is the last high when it broke, or the swing high all the way over here. Either way, let's have a look. Look, every time, every single time. Let me pause it. Every single time, over and over and over and over again, the market does it. Now, from time you understand these concepts and you understand how that can happen, okay? The next thing is this. And I'm going to give you a gem. Every time you take a trade, reanalyze the chart. All right? I'm talking. This is a gem I'm giving you. Sounds mad, right? Every time you're about to take a trade, I'd like you to delete everything off your charts and start again. Okay? Because sometimes what happens is that you begin to marry your trade. And depending on what time frame you're looking at, you might have just fallen in love with the 15-minute. Your whole world is the 15-minute time frame. You're like, oh my gosh, look at the imbalance over here. Jay said it's going to tap into a zone over here, and there's a candlestick zone over here, and your whole world becomes obsessed with this 15-minute time frame. It's only when you delete everything, start again, you go, oh, wait a minute. that 15-minute time frame that I thought the market was going to tap into is actually a larger imbalance on our time frame, and that looks like it's going to be pushing down. I'm telling you this from experience that it happens, especially if you've taken a profitable trade. When you're taking a profitable trade, you start thinking to yourself that you've clocked it, that you've absolutely clocked it. You know what it's doing forever and ever and amen. And I'm telling you, you'll thank me later if every time you take a trade, yeah, especially if it's a high probability trade or a trade that you know you don't want to be taking 1,000,005 trades like a scalper. You want to be taking one trade that goes very well. After that trade goes very well, delete everything off your charts and start again. Because then you'll be able to go, okay, well, I was, you know, even though I did buy it up into here and made great profits, I don't think I want to buy it again because of where we are in the where we are on the charts, where we are in the market structure. Yeah, I'm telling you, it's going to help you so much. Yeah, let's have a look at this market as it stands right now. I'm playing it forward, and we are on the daily time frame, so every single one of these candles are daily. But we see the market come all the way up into here. Okay, let's have a look. All right, now we could pull out some more lines. I could go and grab this little line over here. Now obviously the market's playing out our replay, which is fine. I'm just letting it play. Okay. All right, this is another little sub trend. How you can see the market tapped into here and then tapped into here. These sub trends occur, guys. And where we are right now is explaining it one more time to you so you understand what I'm looking at this week. The market has pushed up into this level here, okay, made a bullish impulse, and then it broke this swing structure. The swing structure is the one that's touching my trend line. All right, so we can see some different swing structures touching the trend line. Have a look. Touch it. Yeah, even in here, touch it. Broke that level, and then we were expecting a retracement back up into potentially 50%. Look, I've just shown you multiple times it doing it. Potentially 50% of the impulse. Yeah, which we didn't quite get there last week, which I said I'd be concerned about this little high, that we didn't quite get into these levels here. Why are those levels extra interesting? It's because we can, when we look left from this 50% level, we can see, as mentioned, all of this structure. The price, for whatever reason, enjoys that level. It likes that level. It likes that price point, the market. The market likes this around this 126000 level, which is a key level. The market likes that area. So in my opinion right now, my thought process is that maybe right now, this week, this market is now finally trying to get back into, trying to tap into that 50% area here. Ultimately, continue its run down to equal lows over here, okay, and beyond. Because we're at the top of that yellow range. This is the top area, this yellow range. Yeah, if I put a bigger red box sell area, we're at the top of that kind of range. Okay, so at the moment, that's what I believe this market is doing. Now, the market has the ability to make retracements and throw spanner in the works. Yes, it does. Look at it. Look at what it's done here. Look, it's done this little impulse into here. And if it wanted to be stubborn, it could decide to come back down to the bottom end of this green line first, where we can see what? A concern imbalance in here. And it could decide to do that for the next couple of days. And you're like, Jay said it was going to push up to this level, but it's been falling down for 2 days. Yes, because in the market structure, there's a reason that it could come down here. It's this imbalance in here on a daily time frame. Okay? That's what it is. This imbalance there on a daily time frame. Okay? But at the moment, if I drop my time frame down to an hour, we're seeing great hour structure being broken bullishly. Like maybe what it wants to do is push up into this 50% level first. And then it's going to come and close this imbalance at a later date, because the market, look, from here it's making higher highs, breaking structure, higher lows, higher highs, and at that point in time we're trading what we see. What we see at the moment is this market looking like it wants to push up into these levels. Now, can that change today, Monday, with news and other stuff that's happening this week? Of course it can. It can decide that instead of going straight up to that 50% level and then turning this whole boat around and starting its sell journey, which is ultimately, like I said to you, what we want to do. This is the boat, guys. Have a look at my boat. It's a really good boat. There you go. That's a bolt, believe it or not. I'm going to color it in. And starting this bolt journey in this direction, it might, before it does that, it might say, let's go back down here first. Close this imbalance and then go back up here. And then start a journey. It might do. I don't know. I have a crystal ball. Okay. Or hopefully we just go straight up into this level. We might see when it gets up into this level, the bolt, as it's turning, create some consolidation as this big bolt is turning around. Create some consolidation, and hopefully we see some structure breaking, and then this bolt might be starting its journey. All right, might be starting its journey this direction, never to come back to this area now, leaving Dominica for good and coming back down to wherever it's going. All right, but at the moment, Monday, its current energy is that this might be what's on the cards at the moment for this market. So this is my analysis of this market potentially pushing up into these levels. Yeah, but once we get into these levels, we've got to be concerned that we've now got back to that 50% retracement level, and we might start seeing that boat turning around, start its bearish journey. And where we're going to? Well, to structure. At that point in time, this market, we have been saying that this market is going to be trading to structure, trading towards equal lows. So we're going on a larger time frame. We're going to go on an hour or a 4 hour, and we'll be turning around and saying, okay, where's our great targets? If we get up in here, we'll be targeting here. We'll definitely be targeting past this huge imbalance, down into this type of level, then down below to these swing lows, and ultimately beyond, because it should not be trying to go. Maybe we might see some sort of, because the market likes to keep us on our toes, just like we just saw in the other example. We might see it coming from up here, this is our 50% level, and start breaking down, and then you might see a big retracement come all the way back up into here just to give you a heart attack. But ultimately, we want to see this market doing this. Now, I thought that maybe we was going to get up to that 50% level last week. We didn't, and to be fair, I kind of knew that we wouldn't. I wanted it to, and how did I know that it might have not, from all the way down into these levels down here, get up into those levels? What gave me a little inkling that maybe that might not have happened? This is a good question for somebody. Jay, do you know? What gave me a little inkling that it's possible that market might not move like that and get all the way up there? What gave me an inkling? What could I use to try and see whether or not there's enough fuel in the tank that this market was even ever going to get up to those levels?
The strength and speed that it broke in the opposite direction.
Not what I'm fishing for, but a good try. What could I use? This is GBP USD. I knew that I was all the way, when we was looking at this on Monday, and I could do the math on it, all right, from, let's get the right date, from here, Monday, all the way down here. I could do the maths from here all the way up into these levels, which 50% is about 350, 400 pips. Guys, I could use my average daily range, right? Yeah, I could use my average daily range and be like, wait, I mean, unless this just keeps going in one direction, which the market never does, I could have my own guesstimates. Like, we might not get up into this level in the next 2-3 days. You understand what I'm saying? Look at this here. It was at Tuesday, Wednesday. This market moves approximately, about 70 pips average daily range. So in 5 days, it's only moved 300 pips. And that's if it's only going in one direction. Or 350 pips. And that's if it's only going in one direction. So therefore, it was a bit of a push to think to myself that last week we was going to get into that level, but this week we could do. Because from here, where we currently are right now, up into these levels here is only 130 pips. So realistically, that could get done in a couple days. Maybe even one day if there was some compelling reason why, like news. Does that make sense? Does that make sense of how we're using daily range, we're understanding market structure, So even like I said to you last week, I was thinking to myself that we're going to get into that 50%. Was that this was great, this impulse that happened. I was able to trade that and had a tremendous trade, which I put in the group, which you've seen in YouTube as well. But the point is that it was a bit of a stretch thinking we'll get up into this 50% line. But when we got here and we've seen this retracement now, possibly now is a better platform to reach up into this level. So therefore, guys, like I said to you, I've told you my outlook for this. My outlook is probably immediately, maybe today, maybe even tomorrow, depends how today goes. I think that this market may wish to push bullishly take some of the liquidity, all right, the liquidity sitting above these highs, yeah, and continue pushing up into these levels. If it wants to be stubborn, this market has the ability to come back down to this yellow trend line here, or even worse, which is something that is definitely a concern, is this market could decide that before it goes up in there, it wants to come and close this imbalance that exists in here. I'm hoping it doesn't do that. Yeah, I'm hoping it first and foremost goes up in here, and then where everyone's looking at it coming down and getting in and closing this imbalance. That's what I'm hoping to happen, but I do not know. None of us know. Okay, and that little trade that I took this morning just to get the ball rolling, it's pushing up. It's there. It just stopped me out. Made a little bit of a retracement just to give me a little heart attack, but it's still pushing up. Have a look. I took a trade on a very small time frame here. Okay, from about approximately here, when I saw the structure break, and the market came all the way up in here. It came all the way back down. My stop below these lows. This is why we play stop, especially on the lower time frames. We play stops below the lows. All right, swing the swing lows of that kind of time frame. And I came all the way down in here, and now we're back up here in profits. My entry somewhere around here. Okay, but that was just a little smaller risk trade on the basis that I believe that this market's going to get up to equal highs. All right, equal highs, and more important, look at these equal highs over here. What's above these equal highs? What's above these equal highs? Liquidity. All right, and the market likes to trade towards liquidity, so we might see the market push back up in here, capture some liquidity, maybe make a retracement, and hopefully continue to push up, which is what I'd like it to do, and just continue making its journey towards this 50% level. All right, does that make sense in my outlook of GU? Have I broken it down all the way way back in time? I think I have. I think I broke it down in some real detail to let you know why those are my bias. I broke it down to show you how other entries happen. I broke it down to show you how the market is fractal. And what does that mean? It just means it does the same thing over and over and over again as you zoom in, as you zoom in, as you zoom in, as you zoom out, as you zoom out, as you zoom out. It does the same. The trick is to be able to be aware and know where you are in the markets. To know, okay, I'm here. I'm in this retracement. Okay, I'm here. I'm in this correction. Okay, I'm here. I'm thinking to myself, the market's trending down, but it's actually in a larger consolidation range. That meaning that if it gets to the top of this price point, it may turn around. That's the trick, to know where you are, so that you can make the decision. Because a lot of the time we lose where we are. So the gem I'm giving you today is, if you take a trade, even if it's a profitable trade and it does fantastic, before you take another trade, yeah, so that you don't overtrade and you're not just hitting the button, figure to yourself that you can't miss, all right, is to delete everything, all the lines off your chart, and then remark it up. And if after you've remarked it up, you can see an area that you want to get back into, that's what you want to go and do, then go and take that trade. All right, do not just get into this zone of, oh yeah, boom, I'm just buying it and buying it and buying it some more. I'm going to keep buying it. I'm going to keep, because what you don't know is, yes, the buy was good from the first time where you took the buy from, okay, but it's not going to be good for the second time because it's already made its push up into a level, and now it's for all purposes. This market's tapped into that 50% level. It sells only, especially when you start seeing structure breaking. Even if you see very, very fast price action in there. Yeah, even if the market starts pushing down and doing the craziness, well, maybe you're going to stick to your bias. You're not going to let anything draw you out. Not the markets, not what somebody else is doing, not news making some volatility. You're going to say, look, I've looked at this from market structure perspective. And personally, for me, when we get up into these levels, for argument's sake here, I am only interested in sells. Now, let me tell you something about this 50% level. I don't know if the market just kisses it and starts turning around, or whether the market does this and pushes into it a bit deeper. All I know is I'm going to be watching the market structure and waiting for confluence of the market breaking structure into doing what I'm doing. Like I said to you, these lines are just guides. The market doesn't care about your silly lines on your trading view. The market does what it does, especially if there's news or other things that are hurting. But the point I'm making to you is, from in this area, if you want me to go and mess up our charts one more time, at the top of that range, the top, ideally, I'm interested in sells. Yeah? So if this market comes up in this 50% level and starts to turn around, look at it turning around here. I'm interested in sells. And I'm waiting for themselves to make it go to house.
I was on tour.
At least get down to some equal lows.
We had an Asia tour.
Yeah? At least surpass those equal lows and go for other larger equal lows. Larger structure. And then I'm just laughing my head off at the end of the week or next week saying, my gosh, guys, I'm still in the cell.
Singapore.
In this GBP USD, it's just going crazy. It's been going and going and going and going. I hope you understand my analysis, guys. I hope you can take the value and be able to go and look at your own charts. And if you don't believe me, break it down. Break down what we did this morning. Break down understanding a larger range. Yeah, break down understanding what top of the top is. This is the larger range. Okay, this is coming up there bullishly, but when it starts coming bearishly, I draw my range. I want to take a trade from the top of that range. And then when I want to zoom in again and I see the range and it sees getting bearish again, I want to take a trade off the top of that range, which is the top of the top of the top. And that's a high probability trade, and then slap that trade in with your stop above the high and then play it forward and go, oh my gosh, that would have been a 1 to 10. And if you've seen that on a back test, then ultimately you're just looking for that in real life. Just quickly go and look at another pair so I can show you a quick example. Pick a random pair for me, guys. Any pair that you want me to look at, pick it. Let me know. Tell me what it is. So I'm gonna have a quick look at it. Just go on any random pair. Just tell me. I'm gonna go have a look.
NZDJPY.
NZDJPY, as random as it can get. Maybe someone out there is trading it. It's not, NZDJPY. What do? I come to my chart. First thing I do, it's not a market that I trade. I need to wipe my charts. I need to zoom out. I need to find out what's going on. So straight away, look, though I never trade NZDJPY, I can immediately say this market's been trading within this massive range. Okay, this market's been in here. All right, it's been in here. Came down here, then came back up to here, then came down here, then it's in here. All right. Okay, cool. Now, yes, you may be able to try and draw some little, this is the kind of wave of what's going on here. So maybe it's making higher highs now. Maybe since this point here, it's decided to make higher highs, higher lows, and it's going to make a higher high now. Maybe. I don't know. All right. However, at least I can see what's going on. Let me just slap in some lines, some trend lines, just to guide my eye when I start to zoom down. When I start to get into smaller time frames, I don't want to lose what the larger structure is. So I can see this market's trading within this range. I can also see the ceiling over here, okay, at the top of this where it's been trading within, okay. And we'll drop down to my daily time frame. So on my daily time frame, okay, I get more information, more detail now, as I can see this market in here. So I can see now that this is a bullish impulse, and down here would have been the bottom of the range. It would have been taking this trade from the bottom, of this yellow range. Okay, by the moment you're not at the bottom, we're kind of in the middle of a range. Yeah, kind of in the middle of a range. So I don't get a tick there. I could draw some little lines in like this a little bit. I'm going to make it a different color. And I'm like, okay, we're kind of, in the middle of this bigger yellow range, but we're at the bottom of this little impulse-ish. But I don't like it for the fact that we're in the middle. Yeah. And we're coming near to the top of a range. So if I was to draw in like my red boxes, if I can find my little red box again. This here, because this market's been trading within a range, is the top of this range. This is the sell area of this market, because the market's been trading within that range. It may be looking like it wants to break that range now, but I don't really know. But in the smaller range, this market is bullish. So ultimately, I only am interested in potentially buying this market from on this line. This is where my interest is for this particular market. It's a bit of a problem because we're at the top of this larger range. That's already a stain. We're at the top of this larger consolidation range. It would have been great if I was looking for a bullish entry right at the bottom of this big kind of consolidation range. But that's a bit too big. We're going back into tens of years. All right. So I have no problem with this range that we've drawn in here. That's going all the way back to 2020, right? As it's a bullish market. So I would like to be taking buys from the bottom of this range. And if I'm not lucky enough to take buys here at the bottom of that range, here at the bottom of the range, because I just wasn't around at that time, well, the next best thing is the next impulse. So the next impulse is that green one that I've drawn. And ultimately, I would like to be taking buys from the bottom of that range. So an ideal place I would have been liking to take a buy from would have been down here. Or would have been down here. Would have been down here if I had enough data points to even know that's the bottom of the range, which I probably wouldn't, to be fair. Okay, so I wasn't able to get in here. Okay, fine, no problem. Now let's zoom in and see what's happening then with that market from here. But from here, we can see that the market has made an impulse like so. I'm going to make it a different color so that we don't get lost in it.
Saturdays, we all over the place. We're playing everything.
Like that. Let me try and stretch it out. All right. So at the moment, right now, we are at the bottom of this blue range. Okay. Sorry, the way I've drawn this is looking a bit mad. But I am a bit concerned that the market might decide to come down here and tap into the bottom of this green range. All right. So once again, if I was to draw in those little areas that I might be interested in buying this market from,
What we doing?
it'd be on the bottom of this little green line here
Somebody said a remix of
and
with this.
the bottom of potentially this line over here. So these are all. So right now, this NZJPY is in a potential buy area, but it's the concern is it doesn't want to come back down to this area over here, which was the other larger trend line. You see all my concerns as I'm looking at it. Now, if I really wanted to trade it, because it's a daily time, I could drop my time frame down. And what am I doing? I'm simply waiting for some sort of confirmation that's going to tell me that now is a good time that I could possibly get into this trade. And that confirmation would be that market breaking structure. Have a look. Look how the market price was trading down within this range. And at the moment, look, it pushed over here. It broke this structure over here. And now this market is correcting back down here. And if I wanted to take it on a safe entry, I'm waiting for a close above here to get involved for the buy. That's a safe, and the safest place would be potentially below this swing low here. All right, an aggressive entry be wherever it turns around here, and a very aggressive entry be very small if there's a smaller little retracement. All right, but so for argument's sake, right now, this could be a trade that I could decide to take on this market. However, I am concerned that this might come down to this other trend line, this other buy area. I am concerned, so I'm not hitting the button yet. I'll just be looking at it, speaking to myself that this is a possibility of this happening. Let's drop our time frame down to an hour, because I'm on a 4-hour time frame. Let's have a look. This market definitely broke this structure over here, broke it, retraced, and it's coming back to where might it be coming down to? Well, it's sitting in the 50% area right now of this little impulse. It's sitting in that area right now. So I would be personally, if I was going to get into this trade, be dropping my time frame down, looking at this impulse of this market coming down here, which is a bit difficult to see the structure. But let's say, for argument's sake, it's like this. Okay, and I'd be saying to myself, I need to see some sort of confirmation of this market breaking structure bullishly, which at the moment I do not have. I've just got red candles running down here. I'd like to see some sort of break of some structure. Yeah, there is some minor structure in here. If you can see, it's ugly, but it does exist. It's in here. You know, it's a bit ugly. Yeah. I'd like to see some sort of break in here saying it's going to do something, but I cannot hit the button just for hit the button's sake. On a 1 minute time frame, I'll see something. Hey, look, I go to my 1 minute. Look, now you can see better structure. Look, you see this little stuff happening. Now, let me explain to you like this. Look, in all of this push here, coming down here, the market's been making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now, if this market did this, and then did this, and did this, it's changed its character. It's changed its behavior. And even though we're on the 1 minute time frame, some people, if they're brave enough, all right, would use that as an entry signal that the market is turning in an area of interest at the bottom of this range, bottom of this impulse, in a larger area of interest, which is that buy area and that 50% retracement area. And they'll say, you know what, I'm in. Now, I'm not saying that's a 10 out of 10 out of 10. It's not. But it's a reason why I may have get into this trade. Yeah? I can't just hit my button here. But if I had to hit my button, I'm waiting to see, you know, price breaking outside of the market. I'm waiting to see some of the structure over here, for argument's sake, being broken. Indication of where it wants to go to, some sort of correction, and then some sort of continuation. And then I may decide to get involved if we was closer down to this line here. But the smarter thing would be to wait until we break outside of this bearish trend. Because even if I got in here right now, hit the button right now, I saw some lovely structure broke and I got in here. The concern is, are we just going to get back to the top of this range, boing, hit our head, and start coming down here? So therefore, I want to see at least this ceiling don't mean anything. This is going to happen. And now we're making our way where I ultimately want to go. So even though on a 1 minute time frame there is a potential entry, yeah, let's imagine for argument's sake we took this little 1 minute entry. When we got up to these levels on the top of this trend line, I'd be concerned of whether or not we're going to hit our head and continue coming down in this trend. Because for all I know, though this is that kind of 50% area in line with for all I know, it wants to come down a bit deeper first. Oops. It wants to come down a bit deeper first before it decides to say, okay, now we're ready. I don't know. I do not know. All right, so like I said to you, ideally, I want to see this market price break outside of this trend. So therefore, I'm not saying to you that it's changed of character on a 1 minute time frame. I'm going to tell you it's changed character on a 15-minute time frame, on an hour time frame. Do you understand what I'm saying? It's a bit difficult with this because its impulse has been very, very aggressive, very fast. So if you started going to a 15-minute time frame, you can't see anything. But that's fine. It means that you're waiting for a break of this structure then. That's what it means. You're going to be more patient and you're going to be waiting for that market to push all the way up and start breaking some structure like so from your buy area, making some correction, making some continuation. Then you can say, yep, Jay, I'm interested in this. I'm ready to get in this trade. Where am I taking it to? I'm taking at least to equal highs. But ultimately, looking at this larger structure, this market may continue to push up, Let me get rid of this. To the top of this range. Yeah, like I said to you, it's not 10 out of 10 because when we start getting to the top of that range, we're in that red sell area. So that's why it's not a 10 out of 10 out of 10. That's why we can only take, what's given to us, which would be us trading this range in here. Because when we start getting up to the top of this range, we're already in sell territory. If you really want to go there, look, we're already in sell territory because we're at the top of this range. So now you understand that concept of 10 out of 10 out of 10. This wouldn't be something I'd be putting my mortgage on it, my whole life savings on it, saying it's going to keep going up and up and up. How can I do that? How can I say that when it's trading within this grey box? It looks like maybe we've made a low over here, higher high, and a potential higher low, and we're going to make it looks like possibly that could happen. But ultimately, I've got no confirmation that this market ever wants to break this level ever.
Let's dance.
Whereas if I was looking at another market that was doing this and its overall trend was like this, it'd be different. I'd be saying, yeah, I'm confident that this market looks like maybe, it's on this trajectory. But I can't say that about NJ. I cannot, especially with, we know there's other factors as well in regards to Japanese yen that may see that, that market gain substantial strength. Okay, and if that is the case, then we might see it tap back into the top of this range again and then decide it wants to make its little run like it's done in the past. Bearish. Okay, might decide it wants to come all the way down here. So that's how I've identified this. This wouldn't be a 10 out of 10 out of 10 setup for me. This wouldn't be something I'm looking at going, oh yes, I really want to trade NJ. But if I had to and there was a gun to my head, as I've explained, that would be how I'll be looking at this trade in here on a smaller time frame, and I'll be taking into consideration the fact that we're potentially buying into an real sell territory. Okay, and I'd be also concerned whether this market also wants to push back down further into this buy area. There you go. All right, I wouldn't be in short, I wouldn't be rushing to trade this when there's other markets. Does that make sense, what I've said there, guys? I hope it does make sense, and I hope I'm not losing anybody, because this is pure market structure and price action, strategies and things that we're going over. And it's the best way, guys, because it tells a story to you. It makes things clear of what it is that you want to do, what it is that you could do. Whereas when you don't understand the market structure and price action, you're just winging it. I just saw a big candle, so I'm winging it. I just heard someone gave a signal out in a Telegram group. I'm just winging it. Oh yeah, I've watched this, new trading strategy. The guy was saying when you see this happen or that happening, you should go for a buy. That's just winging it. You don't really know. But when you're looking at market structure, you can go into any market. You can go to any pair. You can go into stocks, futures, cryptos, anything, and be able to understand from a market structure perspective of what the market is doing. And why is market structure so important? Because it identifies the trends in a market. Do you understand what I'm saying? Just like we have our seasons. After a certain amount of months, we expect it to be spring. We expect it to be summer. We expect it to be autumn. We expect it to be winter. Why do we expect this? We expect this because over the years, that has been the trend. Can you hear what I'm saying to you? Am I making sense? That's the only reason why we think to ourselves that's going to happen. It's because we've seen it historically that after a certain amount of time, it gets hot. Then after a certain amount of time, you know, the leaves start falling off the tree. And after a certain amount of time, it gets cold. That's because there's a cycle. Do you understand what I'm saying? And I'm saying to you, if I look at this market's been doing this. This is its seasons. This is its cycle. I'm saying, you know, whoops, am I done? Let's go back. Where was I? I don't know what just happened there. Let me quickly go back to that from here. I'm saying that the market, we're looking at it. I don't know what just happened there. But we're saying, was I even at UAG? I can't remember. I'm looking at the cycle, and we're saying that's this cycle. All right? And we're going to turn around and be like, okay, the market has, that's the cycle, that's the seasons of this market. So when we get up to the top of this range, we're thinking to ourselves, maybe this is what's going to happen. And that is the market structure and price action that I'm trying to get you guys to be able to read so clearly. Be able to start reading that. To be able to start reading that. So you can say, okay, this is what's happening. Now look, for example, this market is making higher highs, higher lows, but at the moment, Euro GBP is trading within this range. So therefore, when you get to the top of this range, you're thinking to yourself, there's a high possibility the market might fall off it. And at the bottom of this range, you're thinking to yourself, there's a probability that this market might be buying up into it until it shows you different, and then you can change your. This is just the seasons. The seasons of this trade is this, every time it comes up here, it wants to come back down into these levels, and every time it comes down, it wants to come back up in here. And every time it comes down, it wants to come down here. Every time it comes back up here, it wants to come down. So that's just the seasons. That's just me looking at the trend, looking at the patterns. You understand why it's going sideways right now in between this price, in between here and here? God knows. Maybe there's a great reason for it. Some great fundamental reason this market is just going sideways since 2016. But either way, if we was trading it, this becomes a hard edge for us. Down here becomes a hard edge, up here becomes a hard edge. And then it happens again, and we zoom in and we find the trend, and we zoom in and we find the trend, the market structure, we zoom in, it's fractal, it's the same. Within this hard edge, this red box, the market would be bullish, making this trend, or bearish, making that trend. And based upon how we trade and when we're trying to trade, because we're probably not going to be taking weekly candles, all right? Then we make a decision based upon that structure of what's been happening. And we wait for confirmations. We don't hit the button and we hope for the best. Look, have a look at this. I'm on an hour time frame. This market's within that bigger red trend, but ultimately it's been doing this. Boing, 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 boing. I'm expecting to see it boing above these highs again. And when it boings above these highs again and we're getting into these type of levels, I'd be understanding that we are in the top end of a range. Like ultimately, if I really want to go 10 out of 10, that I don't want to be selling this trade from when you're up here. I want to be waiting for when we are down here on our potential, in our potential buy area, which is going to be on the bottom of that range. See? Like say if I was in this trade here and I see this market breaking structure down here bullishly, I'd be trying to get in for the buy and I would have been good. Then when it came back here, made a retracement. Where did it retrace to? Have a look every single time. I'm going to keep telling you guys, have a look. When this market pushed up here, where did it retrace to? Every single time.
50% of the impulse.
Do you understand? So when you see, I love asking you guys to say that, because I'm not saying that it's gonna, like that's in all you need to trade. But now, whenever you're trading and you can see a big impulse breaking structure, and you see it start to come back, yeah. So you're in this trade here, and you're like, okay, this trade is breaking structure to the downside. You're gonna be thinking to yourself, you know what? I don't want to get back into the buy. All right, I don't want to get back into the buy of this market, at least until it comes and taps into that 50% area. And that 50% area, you know what you got to do? You got to look if there's structure in here. You got to be like, okay, I can see that the market, for whatever reason, likes this price, likes this area. Look, for whatever reason,
We here.
there's some data points in here. So you'll be sitting there patiently as an experienced trader who understands how to trade, who doesn't get spooked out or forced into trades, and you'll be like this, watch. You'll be like, okay, boom, tapped into that 50% area. Now your ears perk up, and now you're looking for reasons to get in. What do I mean reasons? I mean breaks of structure, I mean confluence. I mean, you're looking for reasons to say, you know what? We've tapped into my area of interest, and I can either take an aggressive entry straight away in here when the market starts breaking smaller structure in here, which is difficult to see in here. But here, for argument's sake, here is a high, all right, off that impulse, because there's an impulse in here. Have a look at the impulse. It's from here going down into this level very quickly. We can see how the market broke this little structure here. And if you wanted to be uber aggressive, as soon as you broke, retraced, and made your continuation here, you could have said, yes, Jay, I'm getting very aggressive in here. I'm in this trade, placing my stop below the swing low, and I'm going to do my thing. Yeah, and if you did that, I'd understand, because you've seen it tap into an area of interest and you've seen it breaking structure against you. I'd be concerned whether this market's going to actually break through outside of the range, which is the top of this white line. But I could understand your early entry, and let's play it forward and see what happens. Goes to space. Out of your area of interest where you're interested in buying the market. Have a look, you'd be laughing like, ha ha ha, I'm so happy, Jay, that I took this early entry. So now I'm killing it. This market's going to the moon. Yeah? Every single time, guys. It happens on every market, every time. Some are more compelling than others because they're top of the top of the top of the top of the top. Some are less compelling. And you can manage your risk, yeah, when you take less compelling trades, or you can decide not to take less compelling trades. That's when you hear man tell man say, you only take the best trades. Well, sometimes it's not necessarily feasible that the only trade you're taking are top, 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 top. Sometimes one of those tops don't exist. Maybe the daily top doesn't exist. Maybe the 4-hour top doesn't exist. Okay, but ultimately, at least you understand what a good trade is from a bad trade. Right now, looking at this Euro GBP, I can see this liquidity here. I can see this it tapped into 50%. I can see it's coming to try, break over these swing highs, and you can see this liquidity above these equal highs. It's going to take these highs. I believe it's going to push up and take these highs on a small time trade. Small movement here. Do I want to go and rush into getting into this trade? Not really. It's not terrible, but it's not great, in my opinion. It's not terrible, but it's not great. If I was getting in right now, you'd be like, maybe you'd want to stop below this swing level over here, or maybe this last swing level that it came and tapped back in over here for whatever reason. And where would you be trying to take that trade to? Let me zoom out. I'll be thinking to myself, yeah, I can see this market has been making some little bullish impulse, taking it back up to the top of the trend line, in line with some sort of market structure over here on the left. Hoping that the market's going to make on a much larger time frame, maybe on the daily, equal highs. Maybe you get all the way up here and touch these equal highs over here and you're laughing your head off. Maybe. It's not fabulous. Yeah, we're kind of in the middle of that red range and it's not fabulous, but if someone had a gun to my head, that's what I'd do. But I'm not in a hurry to trade Euro GBP. I hope you guys understand. I hope we've had some good education this morning. Any questions? Al, what's going on this week if Al's there?
Yeah. Grand Rising all. Today should be a very, very active day. Reason why I say that is because the Thanksgiving's Thursday, Friday. So the market will close early and the volume will be light Thursday and Friday for indices and US pairs. So bear in mind, that was what's going to happen this week.
Okay, fantastic. It doesn't look like there's any news today.
Also Wednesday, there's budget day for the UK, so the GB pairs will move from 12 o'clock. From 11 o'clock, I believe the budget's actually at 12 o'clock. So be aware if you're in any GB pairs. Just coming on the TV right now. 22nd, budget day, yeah?
There you go. I just had to put in some medium folder news to see whether the world was still running today or whether the world shut down. Because there's no red folder news today, but there is some, look, in NZD, all right, some medium news. Is that medium news going to move the market? Maybe a little bit. I don't really know. Okay, we've got lots of speeches coming out of NZD. Bullock speech, Schwartz speech. I don't know what this means. I don't know who these guys people are, but we can click in here and find out from a fundamental perspective. But in regards to red folder news, which you just saw here how I filtered it out. You can filter it out in my FX book. There is no red folder news today. So maybe a nice calm trading days, staying in line with technical analysis today. Yeah, maybe that's what would happen. Great. Maybe my GU is going to continue to push up, which is still profitable right now. And it's going to continue going up and make its way all the way up to that 50% retracement level that we was all looking at, which would be absolutely fantastic. Because it'll be fantastic, not because of I'll be making profits in the markets, but because it just shows how our analysis has just completely played out from last week, how our narrative, which would be great. All right. But at the same time, the markets are going to do what they're going to do. All right. So manage your risk at all times. Definitely make sure you're taking trades. Click the button. You're not going to learn nothing by not clicking the button. Click the button. Yeah. And if you have any questions in regards to what's going on, then by all means, you are Unity TB Free family members. You can reach out directly, and we can analyze things on our personal Discord, personal Zoom, do personal sessions, so you guys understand better. But for now, I'm going to love you and leave you. We're going to put something on that we're going to be able to get into, something empowering, and watch that information so we can discuss it at a later date. But for now, good morning. God bless. I'm glad that you was in the session, being able to learn. This session has been recorded to Zoom. I'm going to stop that Zoom right now.